Hello traders, welcome back to Nova channel and let's continue another topic today. Continue to the lessons relating to Tweezer top candlestick pattern. Today I will introduce with you some indicators that you can use confluence with this Tweezer top candlestick patterns. Let's get started. The first strategy I want to recommend to you is Tweezer top candlestick pattern trading by using retracement on a naked chart. First, you can utilize the Tweezer top on a pure candlestick chart. Here, you use the candlestick charts themselves as the sole technical analysis tools. As shown in the illustration, we can observe a prior downtrend before hitting a low, where the price bounced back. This short-term bullish rally paved the way for the Tweezer top pattern, which may signal the end of the short-lived pullback, which is usually called retracement and a continuation of a downward move. And here's some recommendations for you to identify the entry point. A few ticks below the second candle's low. Set your stop loss a few ticks above the second candle's high. Set your take profit a few ticks above the nearest key structural support level, in this case, the previous low of the trend. And risk-reward ratio must be at least 1/1. We do not recommend taking trades with a ratio below this in any trading situation. The higher the potential reward relative to the risk, the better. However, make sure you use an objective approach when setting your stop loss and take profit levels rather than inflating them artificially. And the next strategy I would like to introduce with you is trading Tweezer top with the key structural levels. We can employ the Tweezer top trend reversal signal in the price structure analysis. As shown, we use the same chart from our previous illustration to identify the key structural price levels. Here, we can observe that the Tweezer candlestick high coincides with the downtrend's previous, now broken, support level, which makes it a new resistance level. This gives us the confirmation that, unless the price closes above this level, the Tweezer top pattern may indeed signal the end of the bullish move. You can set entry point as a few ticks below the second candle's low. Set your stop loss a few ticks above both the second candle's high and the nearest resistance level. In this case, the downtrend's previous support now serving as the new resistance level. And you can also set your take profit a few ticks above the nearest key structural resistance level. In this case, the previous low of the downtrend. And the risk-reward ratio must be at least 1:1. We do not recommend taking trades with a ratio below in any trading situation. The higher potential reward relative to the risk, the better. However, make sure you use an objective approach when setting your stop loss and take profit levels rather than inflating them artificially. And the next strategy is trading Tweezer tops with moving average. One of the most commonly used technical analysis tools, the moving average, can serve a flexible function from setting a potential entries to marking the profit target. In this illustration, we use the EMA34, a commonly used momentum indicator. As shown, the EMA34 has supported the previous price movement, highlighted in yellow, in addition acting as the dynamic support level. Therefore, in addition to the Tweezer top pattern, we look to see if the price breaks below the EMA34 as an added confirmation before we take a short position. And you can set the entry points as a few ticks below the EMA34. The price must close below this moving average, which serves as a moving support level. And you can also set your stop loss a few ticks above the second candle high, and set your take profit a few ticks above the nearest structural support level, which in this case is the uptrend broken the previous resistance level. And for the trailing stop, sell if the price breaks above the EMA34 before it's reaching your target price. And the next strategy in today's topic is trading the Tweezer top with relative strength index divergence. Compared to other technical indicators, which are generally lagging in the natural, the RSI sets itself apart as a potential leading indicator by serving as a divergence tool. As shown, the RSI already flatlines on the Tweezer top's first candle. This creates the bearish RSI divergence, as the price was still going up when the RSI flatlined. The first candle is then followed by the second candle with the same high, ultimately forming a Tweezer top. Hence, in this scenario, the candlestick pattern serves as the confirmation of RSI advance, the reversal signal. And an entry point for this case is a few ticks below the second candle's low. And set your stop loss a few ticks above the second candle's high. And you can also set your take profit a few ticks above the nearest structural resistance levels, which in this case is the uptrend broken the previous resistance level. For the trailing stop, sell if the price and RSI divergence once again. And the next strategy in today's topic, trading Tweezer top with pivot points. Pivot points that are one of the more unique technical analysis tools that automatically identify possible key price levels where the price may pivot, hence the name. As shown, 3 pivot points are generated, and all of them can be consequential to the price action. For example, in the illustration, we can use R2 as our risk management basis. Also, notice how S1 shares the same low as the candle with long lower shadows, signifying that this may be a key price level. For the entry zone, you can set as the few ticks below the second candle's low. Set your stop loss a few ticks above the R2 line, and you can also set your take profit a few ticks below the next pivot level. In this case, is the R1. Then you can set an optional second take profit if your trading strategy involves selling in tranches, a few ticks above the S1 level. And those are the strategies that I would like to introduce with you in today's topic. Thank you for watching and see you in the next video.